Okay, just give me 1 minute. All right. So, hi everyone. I'm Isaac. I'm a price action trader following Al Brooks, and I'm not a teacher. I'm just doing my personal journal of my trading on the S&P Futures. That could be the ES E-mini or the MES, the micros. Um, so today is Monday, May the 18th, 2026. And let's start from the top. Monthly chart. Looking bullish. But here for the May monthly bar, we've got some wick to the upside. Still some time left in the month. Can the bulls undo that wick? Or is it about time for the bears to come in and push this down, make it more sideways? They would have to do a lot, honestly, to make this go more sideways. So I'm still more bullish on the monthly. Weekly. So this is Monday. This is this week. Last week, we ended with a really nice wick on top. So that does weaken the bull case, but this still looks really nice for the bulls. Bears could still come in and carry this down a little bit more, but I'm expecting buyers below any of these bars. At the very least, it's support here at the top of this range. Here's the daily Globex. Oh, very bullish. Channel here. Channel. Spike up and big bear bar down. Finds support here. Might start going a little bit sideways, but still bullish. Here's the daily RTH. Remember last week, Friday, we had this big gap down, and then it was that day was sideways, but then ultimately it ended in this bear bar. We went down more, tried to retest down here. The bulls came in successfully at the end and pushed this up past Friday's close, just barely, past Friday's low, and then just above Friday's close. That's where we closed today. So this damaged the bear case. Having said that, I think it's not too long before we start going a little more sideways. Okay, so here is the 60-minute RTH. And yep, again, Friday gap down, sideways, but then ultimately down. And then here went down some more, and then trading range shot back up. Just closed above Friday's close. So yeah, it's starting to look like more of a trading range. Now here's the 15-minute Globex. Overnight, which starts Sunday evening. Yep. Went down a bit, then sideways, then up. And we opened around here. Yeah, this is where we opened. And we went down again. So stayed in this range. I think we went one tick above the Globex high, and then we just came down. Wedge, nested wedge. And then again, nice spike up here. And this was actually, so President Trump actually posted, I think on Truth Social at 3:01 p.m. Eastern time, and that just caused this huge spike up. So we're going to look at that on the 5-minute chart. 5-minute RTH, which is here. I will start by deleting these drawing tools here. Don't need that. Okay, so we start with a gap up, and the bears close it pretty quickly. But then bulls come in, looking really nice. But then we start to go sideways a bit. We have a nice bear bar here, then bull bar, and then we just start going sideways. You could think of this as if you start from yesterday's bar 81, going to today's bar 1. This could be a leg 1, pull back leg 2, and then into a lower high double top. I mean, for anyone who's trying to trade that, well, basically what we're considering is that you had this nice bull move up, creating a new high of the day, past the open of the day here, but then we come down, nice bear bar down, but then we're retesting support down here at bar 3 and 4, then nice bull bar up, but then it starts to struggle, sellers above, and then buyers buying it. Perhaps to get out break even once they realize they're not going to go further up, because this bar 9 is disappointing follow through. Same with this bar 6 after the bar 5 bull bar. So we end up coming back down. Nice bear bar down here. And we crossed the current day's low. We made a new low of the day. And by now the first hour has passed. And what does that look like on here? It looks like a doji on the first hour of the 60-minute RTH. Okay. So naturally bar 14, I mean, if this looks more like a trading range already, so and yesterday was a trading range as well after the big gap down. So bar 14 is going to be buyers at support here, which is yesterday's or Friday's low, trying to hold the line there. But after this big bear bar, naturally sellers above the bar. Then we just go kind of sideways. But we're hitting resistance here at the lows of bar 7 and 8. And then we go back down with an outside down bar, which again, in most contexts, is a trading range bar. But we are starting to cross below Friday's close. And so there's a chance we'll go down lower. So we do go down lower. Kind of struggling our way down a bit. I think we have a wedge here, wedge bottom, 1, 2, 3. And we get a 2-legged correction of that. 1 leg, 2 leg, well, 3 leg actually. And for the bulls buying, let's say buying above bar 32, you have really good risk reward, which means the probability is lower. And what I learned from the Al Brooks course is when you have good risk, when one side has very, very high reward and very low risk, the trade-off is there's going to be low probability. The other side knows that. So in this case, I think the bears know that. So they'll be selling, and then they'll just sell more higher at the top of this range here. Right? Because we've already broken below this, bar, 13, 14, 15, 16, 17, 19. So 13 to 19. We've broken below that. So the bottom of that is now resistance. So basically Friday's low. You see that red dotted line there. So that's resistance. So yeah, bears would be fine selling more around that area. And then we get a nice bear bar again. The biggest we've seen since the beginning of this bear move. So is that the start of a new bear trend? Or is it final exhaustion? Well, the bar 37 tells me that it is final exhaustion. Look at that disappointment there after this nice bear bar. Having said that, obviously still sellers above 37. And yeah, we go down a little bit. But then bulls carry this up. Not even getting back down to retest the close of 36 and 37. I think it only got about halfway before going up further. So there's our two legs. And so this makes me think bulls have some power here. And on top of that, what else did I see? We'll draw it for you. I thought I saw a possible triangle. Let me just see if I can get it here. Well, this was an outside down bar here, 27. So again, that's usually a trading range bar. Then we had an outside up here. Let me just check and make sure. It did not close or even go above like 29. It didn't go above 28. But because its high was equal to the previous bar's high, and its low was lower than 28 low, I still consider it an outside bar or outside up. Again, bulls and bears kind of fighting back and forth around Friday's low, but we already crossed it, so more likely we're gonna go down for a little more. But yeah, I was thinking this might have been contracting triangle. But maybe not, because usually I want one side to have at least 3 points, 3 touches, while the other side has 2. In this case, both of them had only 2. I did notice that there was a quick break above this triangle here. Then it came back down, which made me think maybe the bulls want to, have a fake out breakout and then carry this back up. But then look here. We're still, the bulls are still struggling at Friday's low. Going back and forth, barely getting up here. I thought maybe a measured move based on maybe bar 43 to get to yesterday's close, and it didn't happen. And on top of that, it was what, wedge 1, 2, 3. So yeah, then we started coming down a little more. Quick revisit here to the top of this tight range here. Bulls get out, break even. That's a sign that bears are going to come in, carry this down, and they did. So I was already starting to think that at this point, okay, in spite of the context that I thought was ripe for a bull reversal, like trend line break and all that, the bulls still couldn't carry this back up. So I thought the range was, if I could just get a rectangle here, basically somewhere around here. So I thought this would be the range. If you see there, right? For counting the low of 37 as the bottom of the box. So with that said, see. So from Friday's low to the low of 37, there was a 50% measured move target to around 73.67, like that, just a half hour. It was not reached. Just before that, though, after all these bear bars down, making another new low of the day, we have this outside up bar suddenly. But again, more of a trading range bar. Okay. And after this bear move down, usually sellers above. So, okay, sellers above. Then 63. At first I thought, well, this could be a double bottom, but look at the size of this double bottom compared to the bear move down. And on top of that, again, really good risk reward, which means your probability is low. And the bears know that. So they're going to sell. And of course, they sold and the market went down past this stop loss here, went down a little more. Now, we did not reach this half R based on this range here. And this is where Trump did his post on Truth Social. And there was a sudden spike up. So, let's see the channel, broader channel here. So let's say here. Okay. Should be, okay, maybe here. Yeah, maybe not. Let me try this one. Okay. Yeah, it seems that's probably the one. I mean, having said that, not that it matters now, because for me, by the time I knew that this was the right line, that matches on the bottom, it was already broken. But more or less, this broader bear trend line was broken, or bear channel. Yes, it did close below, but with this bull bar, even with this wick on top, you already know there's going to be a lot of buyers below. So bears came in. This was a double inside bar, which on a smaller time frame is a contracting triangle. And what I know about contracting triangles, or we just call them triangles, is that there is fake out breakout. We should expect that. And so, yes, the bears got the first breakout. Still wick to the upside. But they did get down. They came to support here. And so if you were a bull buying below this, the breakout of this implied triangle, this double inside, then you could just buy more lower here, knowing that this is probably going to finally break above. Of course, we don't know for sure. I mean, nothing's 100%. This could have easily just continued to break down, maybe even come down here and test the low or this bar 66, which I think is an outside bar, doji. Could have come down to the top of that, retested, and then maybe just continued sideways that way. We don't know. But during the live session, it was a lot of activity. The time and sales window was going crazy. So it was worth the chance. And on top of that, again, big bar 67 definitely deserved a second leg up anyways. So most likely it was going to happen. We can call that the Trump bar. And it happened. And then towards end of day, which again, most traders in most cases should not be in a trade after 3:30 p.m. Eastern time. So that's the last 45 minutes of the day. But having said that, you know, if you know what you're doing and you know what you're looking for, I think the bulls did have a measured move that they want to reach, which they did not. And I will show you what that was. I think it was, let's just try. It's from the bottom of this bull leg, and then so let's say to the top of bar 61. So it was retesting these highs over here, or maybe this high of bar 63. That was the failed. That was that failed double bottom. Could have been that, but I can't even measure it now. Hang on. Okay, I'm gonna flip this around actually. Just give me 1 second. And where to buy? Most likely there. So based on, you know, any stop order bulls buying above bar 72, and then that would be their stop, I guess, which is also coinciding with this failed double bottom signal buy. Bulls actually did get a 3R. Now, I thought they were really wanting to get back to the open of the day. And it looks like they were, but the bears, like, they were starting to struggle here, as you could see. And then the bears were coming in, trying to push the market back below Friday's low. Ultimately unsuccessful here, as you can see. So that was my analysis for today. And then where do I think we go tomorrow is probably I mean, looking at this big wick to the bottom, we're probably just going up in a range. This is probably the low of a trading range. I'm gonna just draw this. So maybe this here. So we'll probably just go sideways here. Maybe we'll go up a little more, but we've actually gone up quite a bit. I don't see a final exhaustion yet, but I mean, this makes me think we'll be more sideways like that. And other than that, where is, oh, let me just remove that. What did I do well today, and what do I need to improve on? I could see the wedges, and one thing I need to improve on is judging whether a leg is steep or not. And I learned this when I was watching on Friday, the 15th. Friday, May 15th. His name is Joseph Imbranoni. He talked about this leg here on Friday being steep, and I was like, really? That's steep? So I guess I have to improve on that, because I would have considered this not so steep. I would have expected it to be way steeper for me to consider it steep. But this is steep, especially with the bar at 35. Yeah, and then market coming down to retest that breakout. Anyways, what else? I will admit one thing. One thing I got to stop doing is adding on to winning trades. Well, not always. It just depends on the situation. In a trading range, adding on to winning trades is very dangerous. And I remember Brad Wolf said that in response to a comment I made in the webinar when I was subscribed to it. This is a trading range. Terrible time to add on to a winning sell order. Yeah, and I admit that I did. I really thought we were going to get this half R, which was around 67, somewhere down here. It did not happen, and then Trump posted. So I was done with that. Now, I did have a loss here. I do have stops in place. You should always have stops. But I was able to recover from this move. Mostly recover. So today is still a loss for me, but it's not like a huge, like catastrophic loss. Yeah, seeing a good bull bar like that, especially knowing the context behind it, this Trump bar here, makes the analysis a little easier. Like, a sudden bar like that, something, there was some news or something. And you also know that it's gonna probably get a second leg up, which it did. So I think even when you know that you're right, or that not that you're right, but that you're probably right, there's still the issue of managing your positions and your position sizes. And that is something that I would like to work on a little bit more. So my style when it comes to that is right now I'm trading 1 micro, sometimes for 2, very rarely for 3, but that's a very rare case. I think I did go in for 3 today, and I was able to recover from I was able to like break even. I just can't remember exactly where I did that. But usually my style is um, no more than 2 contracts at a time. And then of course when I scale up, if I'm doing even when I'm back on the full size, like okay, let's say I'm my account is big enough to trade four ES contracts. Okay, sometimes I'll double it to 8, right? So I'll deal in 4s at that point. That's how I do things. If you guys think that's not a good idea, then let me know. But for me, it just makes it easier for me uh, to keep track of my trades. Um, what else? Having said that, again, yeah, don't add on to a winning trade in a trading range. I could just say that. If anything, take off from a winning trade at that point. Like start taking partial profits. It's not like it's not like these Trump bars are going to happen every day, but you got to be ready for them. You got to be ready just in case they do happen. Yeah. Um, Scaling in or averaging in, um, like buying, like I think I bought here, to fade the bear breakout of this double inside. Then I bought more lower, and that's how I got this move up. But then again, uh, I got out early there. So that's the other problem. Yes, I recovered most of my loss there, but then I also have a problem with, or it's actually getting much better now, but I have been working on this problem of, um, getting spooked and, you know, getting out of trades early and taking less profit. Um, but improves I think that improves over time as you get better at reading the market, and then you can say to yourself, okay, the probability is that it'll still go up more, so that you don't, it's in your better interest to hold on. Don't cut your trade. Maybe take partial profits, but other than that, you don't really have to, completely chicken out of a winning trade, because it can go further and you can book more profit. So, yeah, I don't know what else. Hold on. Yeah, I don't think there's anything else to talk about right now. If there is, then I'll make I'll make a second recording and upload it. But yeah, any feedback, any suggestions, if you think I did anything well, analyze anything well, and again, constructive criticism is welcome. So yeah, just let me know in the comments or send me a message, if we are talking on Discord or whatever. Send me a message. But yeah, any constructive feedback is welcome. Okay, so I will leave it at that for now, and I will talk to you guys next time.